All right, it's August 20th, 2024. Gold is money, everything else is credits. Physical gold, spot, that is. That's what I'm talking about here. Old resistance, not long ago from today. We're looking at about a year and a half roughly. It might have been 2 years, I forget right now. It was 1550, 1,550. That was resistance that was just rough. I mean, it was like 8 months in a row. We would get to 1550, boom, back down, 1550, boom, back down to like 1400 or 1450. And everybody was saying, well, there you go. It's a waste of time, waste of currency. Just, stick with other stuff, which, don't get me wrong, there is a lot of sectors, of course, with the tech sector, AI, crypto, Bitcoin, overall was making crazy moves. I was just not worried about those drops because I was always talking about physical, right? Like spot. I was saying, even when that drop happens of, let's say, 5, 10, 15%, then you got to pay premiums for delivery. So it really didn't matter that much on so many levels to be buying the dips, because your premiums would go as high percentage wise as the dip was. That's what I was trying to explain to a lot of people, including some close friends / family. And then we finally break through 1550. Again, I don't know exactly when that happened, but it wasn't forever ago, which is of course $1,000 less than it is today on August 20th, 2024. And then we get up to 1700, gold drops to 1600. People say, see, waste of time, waste of time. What are you doing? You could have been doing this and that. You get the idea. Now we're at 2000, which is of course a psychological number, kind of like year 2000. You got 1999. Everybody was waiting for the ball to drop. New York City, all that, new millennium. It's a big number, right? And that's understandable. Drops to 1900 or 1850. Everybody says, again, you see where I'm going. It's over. It's just a waste of time. We go through 2000. People start kind of raising their eyebrows a little bit. And there's like resistance at whatever it was, like 2070, 2075, 2070. It was just like really stuck in that range for several months. Either trading even or slightly in the red. Well, there you go, waste of time. Everything else is going to the moon. Then gold, of course, breaks through that. It goes to, let's just fast forward to over $2,500 plus a roughly $100 premium for your Eagles. You're looking at all of a sudden $26 or over $2,600 for 1 ounce of physical gold in your possession. Not to mention the infamous or legendary Bitcoin in the March of 2020 when we had a huge sell-off. I believe Bitcoin dropped just under $4,000. So all of this is possible that you can see Bitcoin at $4,000 if we have a major market drop, and finally gold starts to make like fast parabolic moves, not slow and steady. And it's like right there with gold, 1 and 1. I mean, it's just anybody's guess at this point, of course, but overall trajectory, I don't change my stance, I don't change my macro. I just see gold to do what it's done before in other previous bull markets that are very rare, but pretty vicious. And 80% of the move happens at the last 20% of the bull market, which means I don't think we're anywhere close to that. I think we've been in the bull market for roughly 8 years now. I think you can go for another 3, 4 easy. So we still got to see a lot of crazy moves that will happen, but again, that's yet to be determined. When we do get to $3,000 gold, it's going to be again major psychological resistance. I believe this is when the main street, this is where the masses will realize that this is real, and we could have like 30% if not higher drop in the spot of gold, even not just precious metals equities, meaning stocks, ETFs, right? So That's kind of where I see it. To put the time frame on this, it's impossible. It's just noise. All these 5 to 10% swings in so many ways are irrelevant unless you are a professional day trader and you are making in and out moves daily, weekly, monthly. That's a different story. You're selling contracts, you're doing your options. This is different, right? That means you're just speculating. You're not investing. The investment is 5 to 10 years. Speculations are, let's say, 2 to 6 months. So you got to know where you're at and understand that the more you see purchasing power being devalued worldwide, the higher the value of gold, physical gold, will get, because gold is money and everything else is credit. And a lot of people are now learning that, including Bitcoin bros. Everybody, they're starting to understand that gold is far from dead. I mean, after 10 years of Bitcoin's existence, on the anniversary, gold broke its all-time high of $1,923. which was, again, I believe, about a year and a half ago, roughly in that range. Why would something like gold, if it's already been replaced, break its all-time high and now it's drastically higher from that level of $1,900 and I believe $23 per ounce? So gold is not dead. It's actually, like I said, again, becoming more clear to so many people that gold is in the bull market, and this decade will be epic. It will be biblical. Continue preparing. Do what you can, you know, when it comes to controlling what you can, and you'll do a lot better than most people. I'm going to stick with hold tangible assets in your possession at your Uncle Bob in Nebraska if you have to. You know, under a tree that's 10 miles from your house, whatever the case may be. You got to have it within your reach or within not too far distance that you can get to, because everything else is beyond risky for what's to come. So yes, gold is money. Everything else is credit. Small drops percentage wise are just noise. Gold, I believe, is in the bull market, and we are looking at epic decade, and possibly even past 2030. Honestly, we don't know when it's going to stop, because I don't see currency printers stopping anytime soon, regardless of who gets in the office. I am out.